Reserve Bank Governor is hinting at further interest rate cuts this year after slashing them yesterday by 25 basis points. Scott O'Neill is a property expert and also the Managing Director of Rethink Investing and joins us this afternoon. Scott, good afternoon.
Good to be here.
We always seem to listen to what Michelle Bullock says because she can drop a couple of hints about what may happen in the future with interest rates. What are your thoughts on the RBA's governor's message?
Yeah, well, the message was really, the word uncertain was used many, many times. So uncertainty is kind of what the angle they're going with. So a lot of people were predicting 3 rate cuts, including the one yesterday. So it's now looking a little bit less likely that's going to happen. But I'd still be sort of feeling like there's going to be another rate cut by the end of the year. 0.25%, that's what the market priced in. There was actually, if you looked at the futures a couple of days ago, there was a 50% chance they'd do a 0.5% cut. So the market knew this was happening, so nothing really unexpected here.
We already know the property market right across the country is red hot. What effect do you think this is going to have on prices? Because often it just adds further fuel to the fire, doesn't it?
Well, this is the big thing. So the market across the country is doing pretty well in general. It's hot, rents are rising, prices are going. Anyone that was sort of 50-50 before and now can see that we're really in a downward cycle in terms of interest rates. So 3 in a row is pretty significant. We haven't seen this for a long time. And that equates to about $7,500 per annum on $1 million loan, the total savings now. So not only is there more cash in the bank from a cash flow point of view, your lending capacity grows. So when investors and homeowners can increase their lending capacity, first thing they're going to do is spend more. That's what history tells us. So prices will rise at a faster rate, and that could put pressure on those who aren't in the market already.
So on that point, Scott, for first home buyers, is now a good time to buy, do you think?
I would not be waiting. Look, if you're going to buy in the next year or two, you'd rather buy now because you're in a downward cycle. A lot of this money is yet to hit the markets. There's already pent-up demand and low stock volumes as well. So it's a pretty good time to feel like prices will keep going up. So, yeah, delaying it might cost you more.
You mentioned before uncertainty, and that seems to be the key word because our interest rates and the cash rate and inflation and productivity also depend on what's happening internationally.
Correct.
Last time, not this time, last time, many experts got it wrong. The Reserve Bank kept rates on hold. Do you think we could see a surprise sometime this year?
Well, I think they're just like, this is why they're playing each way bets here. They've been conservative, and that's why they've used the word uncertain. So they're not going to tell the market there's going to be 2 or 3 more rate cuts, because that could be disastrous in terms of causing more inflation because prices are going up. And you know, I just feel like they're going to play it pretty safe moving forward. The target inflation is, you know, but it's got to be between 3 and 2%. We're at 2.7. And it's trending downwards as well. This is happening globally, so. You know, unless something drastic changes, I think you'll see we're fairly close to the terminal rate, I like to call it. So it might be another rate cut or 2, but this is basically the interest rate I feel like we're going to be working with for the next few years.
Appreciate your insights this afternoon, Scott. Thanks so much for joining us.